Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Landon Swan, the co-founder of LikeFolio. Welcome back to the show, Landon.
Thanks, Tom. Good to be here.
All right, so it's Investor Day at StarBucks. Shares are down about 25% so far this year, hit an all-time high last summer in 2021. They're changing their CEO. But Landon, you know, it seems like this is one of those brands that consumers are not willing to give up no matter how much they raise prices. You know, some of the specialty drinks are now like, what, $6, $7, $8, $10 a piece or something like this. This seems like one of those companies, the scale that they have and the resilience of their customer is probably pretty good as far as data goes, or are you guys not seeing that?
No, actually, it's really resilient. I mean, this is kind of like Altria or Philip Morris, right? They're selling a legal drug that's fairly addictive, and it's great. I mean, the margins are fantastic. They have good service. People love the different flavors. You know, they got all kinds of seasonal products. So overall, generally speaking, people love this company and this brand. And we see that with, you know, any metric that you look at, if it's mentions or happiness, purchase intent, this is a pretty strong company. The sell-off is interesting. You know, it's pulled back with the markets. Today, it's down a little bit with the markets. And you know, it's a shame that it's happening on Investor Day. I hope they don't read too much into that because, you know, the markets are down. But it's going to be interesting to see what else they say today. I think a lot of it is expected, but there may be a surprise or two in there. We'll see. But when we look at, you know, for example, the mentions over the last, you know, several years, you can see that it's pretty consistent. I mean, people even, you know, over the last 2 years is pretty consistent, and it's not consistent. The stock price has not been consistent. So this is one of those kind of divergence opportunities, I think, where the customer is remaining as loyal, has the same amount of demand as before. We look at purchase intent, even website visits, it's pretty flat. Within a couple of points, positive or negative year over year. So they've got the continued demand, and they're outpacing their competitor. I mean, obviously Dunkin' Donuts and Starbucks, they're slightly different, but you can see that, you know, one is growing when it comes to purchase intent. One is shrinking, and so Starbucks is doing better here. And they've got a lot of trends, frankly, that are working in their favor. You know, people are talking about, you know, wanting to improve their energy. They continually talk about caffeine. They're talking about returning to the office. These are things that are going to obviously help Starbucks as you pick it up on the way to work. And of course, like I said, caffeine's, you know, it's something that people have a hard time giving up. So they're going to continue to go with the company they love. So overall, Starbucks is a great company long term. I am not real concerned with the long-term outlook of this company. I like it a lot. I think it's just a matter of timing. With the markets the way they are, I think it may be difficult to time this one correctly. But overall, positive long-term on Starbucks.
Landon, we talk about a lot of companies and who they compete with. And, you know, Home Depot and Lowe's, we do it a lot on this show. There's probably a dozen of them, these two relationships that we look at. Who is Starbucks' real competition? Because if you say it's McDonald's or Dunkin', I would say those two are comparable, but they don't compare to Starbucks, right? I mean, you're talking about a Home Depot, not even a Lowe's comparison between these two companies. And the question is, do they have competition first? And if so, who is it? Because I don't think it's either Dunkin' or McDonald's.
I'd say the closest thing to competition is going to be the local coffee stores, the local ones that don't have a huge brand name and don't have a nationwide following, but, you know, in your area, they're really great. The other probably biggest, and it's more of an alternative, is going to be, you know, the people that make their coffee at home, Keurig or whatever you want to use. So I think it's, if you're getting coffee through, you know, if you're getting coffee on the road, Starbucks is in a class on its own. And if you want to get a little bit cheaper, then yeah, you're going to McDonald's, Dunkin', something like that. But as far as like high end, I really don't think they have any competition other than those local brands, which, you know, we've done some studies on those. Those have a very high degree of happiness and loyalty. But Starbucks is going to keep encroaching on their territory until they push them out, I think. So long run, I do love this company.
Yeah, and Landon, you know, it is a legal drug, right? Caffeine. I get headaches if I don't have it in the morning. But, you know, I noticed the divergence between Dunkin' brands and Starbucks on the scatter plot chart that you have, and that's to be expected, right? I think most people would probably equate that they like the taste of Starbucks and they're happier with it. That's why it's in the far right corner. But the divergence that you guys, and there's a scatter plot that we've got up there where Dunkin', purchase intent's up there on the left there, so it's in a good spot. But then Dunkin', as far as happiness, I think is what you're looking at there. But when you look at Starbucks and the other chart that you had up where you had the stock price versus the mentions, I think that's key for investors when they look at something like that where, hey, the stock price is underperforming. Maybe a lot of that has to do with China. I know you guys don't have data on the China sales, but they've had lockdowns over there. But when you see something like that, and it's been going on for quarters now, where the stock has continued to underperform, it seems like it's giving you opportunities, but then Starbucks is still lagging. Is there a reason for this?
Right. Yeah. I mean, I agree. If you could go back on this chart to February of 22 and say, well, here's a divergence opportunity when the stock's at $95 and it kept going down. And there's another one and another one. It started to make a little bit of a comeback, pulling back today, but it is off of its May or June lows. But overall, I think that, based on what we're seeing with the consumer, if the valuation was correct in late 2021, then it's way undervalued right now. Now, there's an argument to be said that it was a growth stock. It was very aggressive valuations. Maybe it was too high back then. If that's your argument, maybe it's a fair price right now. But if it's possible, if it was correctly priced, then I think it's definitely underpriced right now, because everything that we see in purchase intent and happiness, even website visits, including worldwide website visits, it's pretty much flat, again, within a couple of points year over year. So the company is just as strong as they were a year ago and just as strong as they were 2 years ago. It's the stock price that's different. So you have to make the argument yourself. Is it a question of valuation or being underpriced right now?
So when you look at that, when you've seen that divergence carry on for so long, and I know you mentioned that you're a long-term want-to-be owner of Starbucks just based on your data here. Is there still added volatility that you have to worry about in the near term where maybe that doesn't converge anytime soon?
Yeah, I think that's the problem, right? You've got to deal with the entire market and other events. So if you could be guaranteed that the market was going to be flat for the next year, I'd love Starbucks here. But it's tough to know what's going on with this market, and if the market comes down, Starbucks is coming down. It's not going to outperform by that much. It's not raging off the charts on the upside. So we're just saying that it is strong as it was a year or two ago. It looks very stable. We'll see what they have to say today. If there's any concerns from investors, that could change things. But overall, I think that market neutral wise, I'm bullish on Starbucks, but market wise, I'm a little concerned overall. I mean, I think everyone is, especially with today. So you got to weigh that in, and the entry point is always the tricky spot. So, a lot of people like to do something where they, put in a little bit each month and just go really small, as opposed to the all-in strategy, which is obviously a lot smarter.
Yep, dollar cost averaging. I like that reference there. And I think, during this investor day, they're coming out with some programs where they're giving student loan management savings programs to some of their employees, trying to fight back against this unionization in a lot of their stores. I think they're offering things to employees that aren't in unionized stores and not unionize. So they've got some wage cost inflationary pressures. Maybe that's why we're seeing that stock underperform your data. All right, great stuff as always, Landon. Appreciate it.
All right, guys, take care.
All right, that's Landon Swan, co-founder of LikeFolio, helping us break down Starbucks. Kevin.